This is East Asia Tonight.
Good evening, everyone. I'm Jill Newbronner. Here are tonight's top stories. China vows to fight to the end after US President Donald Trump threatened an additional 50% tariffs on Beijing for retaliatory levies against Washington. Singapore's Prime Minister warning the world is entering a more dangerous era with the US tariff announcements, but the city-state is taking steps at home and abroad to soften the impact. Stock markets staging a comeback from yesterday's historic sell-off, but investor sentiment remains shaky as Beijing and Washington exchange warnings of retaliation. South Korea has declared June the 3rd as the date for its potential presidential election, one triggered by the ousting of its former leader, Yoon Suk-yeol. NATO Chief Mark Rutte is in Japan in a bid to step up Indo-Pacific defense cooperation amid heightening global tensions. Also ahead on East Asia tonight, US-China tensions simmering over the use of the Panama Canal. It's not just business interests at the heart of the showdown that are at stake, but regular citizens are also facing the impact from the fallout over the strategic waterway. China has expressed a strong opposition to the U.S. threat of additional tariffs, vowing to take all necessary measures if Washington insists on waging a tariff war. U.S. President Donald Trump has given China a one-day deadline to back down from its 34% tariff on U.S. goods or face a new 50% levy. If enacted, this would push total U.S. tariffs on Chinese goods to 104%.
中国人不惹事，也不怕事。施压、威胁和讹诈不是同中方打交道的正确方式。中方必将采取必要措施，坚决维护自身正当合法权益。如果美方置两国和国际社会的利益于不顾，执意打关税战、贸易战，中方必将奉陪到底。
China's Ministry of Commerce has described the escalation as a mistake on top of a mistake and accused the U.S. of unilateral bullying. We have more now by our Beijing correspondent Olivia Song. She's joined by a guest as well. Ollie, there's just such a great deal to unpack.
That's right, Jill. China there signaling that it has the firepower and the willpower to fight this trade row. And the foreign ministry also saying that it will take strong and resolute measures in the road ahead. And now I'm joined by Xu Tianchen, who is senior economist at the Economist Intelligence Unit. Tianchen, thanks for joining me. So much has happened overnight. And even today, China, the main message has been that it will fight till the end. What else can China do realistically next?
Yes, China has a lot to fight, of course. Yeah. So the first thing, if Trump's 50% tariffs I really realize China, I think there's a very high chance that China will match the U.S. tariffs by adding 50%. So I think for bilateral trade is probably constituting a trade embargo for both sides. Yeah, but there's also other things in terms of retaliation. For example, I think it is pretty plausible that China will stop all its agricultural imports from the U.S. Yeah, and hitting Trump's supporter base, for example, and it can also expand its export controls into more critical metals and minerals. Yeah, so that is for retaliation, and China also has a lot of things to do to support its domestic economy. Yeah, because it is realizing that there will be a very strong headwinds coming up. Yes, so I think it is probably coordinating its policy response already.
You were talking about China possibly matching that additional 50% tariff threat? It seems like China has changed tact. It previously was more measured, but now it seems like it's going full force. What do you think is the reason for this? Is it that the quantum now is so big it doesn't really matter anymore?
Yes, I actually want to maybe cite an old essay, written by some Chinese scholar 1,000 years ago, who was sort of saying that today you cede 5 cities to your enemy, and tomorrow you are ceding 10 cities to your enemy, just in exchange for one night of good sleep. And when you wake up, the enemies, they're coming again. Yeah, so I think this is the point when China determines that it cannot afford to be tolerant any further, because it has been dealt with 20% of fentanyl-related tariffs by Trump, but China has been actually doing a lot to stop fentanyl smuggling, so this is very confusing to the Chinese, and probably they need to rely on some, let's say, more vehement response to tell Trump that you really need to, let's say, be careful, you really need to be serious. Yes, if we are going to, let's say, negotiate, you need to be more serious.
You talked about this stronger response from China, but how far away are we from a potential worst-case scenario that we have been seeing that China has been preparing for?
Yeah, I think we are probably very close to that already, because if we are going to see the actual 50% tariff, maybe levied on April 9th, that will be even worse than the worst-case scenario that the market or even probably the Chinese government would have expected. Yeah, so I think that is pretty, let's say, extreme.
But besides the countermeasures and China preparing for it, we have also heard China say that it is open to dialogue. But we know that the Trump administration has said that if China does not back down on these retaliatory tariffs, that talks are off the table. So what is China's next move here when it comes to talks? Who actually has the upper hand and who has more to lose?
Yeah, I think over the past few years, past few months, in February and March, I think there are many media reports, I think, stating that China has been looking for some, engagement with the U.S. But on the U.S. side, I think their response, their messaging was very confusing, and they're not probably very serious about that. So I think I don't think negotiations will happen. Because the bilateral tariff war will have very bad, very deleterious consequences for both economies. And I think at one stage, for example, when the U.S. economy goes to a recession or China experiences a very significant slowdown, there will be more, let's say, political willingness to engage, to negotiate. So I'm not sure who has the upper hand. But I would say, anyway, China is on the defensive side. And if it can prove that its economy is very resilient, despite the very heavy tariff pressure, then it is probably going to come out on top, and probably eventually gain the upper hand.
You talked about both China and the U.S. having consequences amid this trade war. So China's economy is going to suffer as a result of this external pressure. So the question then, I guess, is how much ammunition does China actually have? It can talk about countermeasures, but does it actually have the capability to withstand this fight? And would something like devaluing the Chinese currency that has been talked about a lot, and there's a lot of buzz and speculation about, is that something that you think it's looking to do?
I think technically China would have unlimited fiscal firepower. This is because of how the Chinese politics looks like. So I think the party can readily mobilize a huge amount of, let's say, fiscal spending, including like debt borrowing to support its economy, provided that top leaders think the situation is bad enough, the conditions are bad enough. But if they do think so, then I would expect some resolute and very quick physical response from the China side, and I don't have any doubts on that. And regarding exchange rate, yeah, I think it has been a concern for a lot of people, especially businesses, yes. And I do think that over the recent days, 1 or 2 days, we have been seeing, let's say, a managed devaluation of the RMB, but not by much. And I don't really see the possibility of a very large depreciation. For example, 10%, 15%, things like that. And this is because I think, exchange rate stability has become a high priority in China's calculus. Yeah, and so it won't let RMB drop much further, right?
I just want to very quickly talk about the capital markets because we have seen a slew of interventions by China's national team, and my colleagues in Shenzhen went out to speak to regular folk about how they feel about this entire situation, because we know another key message with all these interventions is to boost domestic sentiment. But before we continue, let's have a listen first.
如果個徵收嘅個關稅如果再上漲嘅話，其實第一，我哋嘅終端客戶嘅價錢肯定會上漲嘅。
國家的反制是肯定必須的，是吧？但是像那个他们加那个关税，它的一些产品，我们可能不一定每一样都用得上。
对我们普通老百姓来说，就是说，像昨天的那个股票的一个大震荡，就是说，你在这个资产的配置这一块，本身我们就是要分散投资，不能把所有的股票都去 all in。
Tianchen, we are hearing there from people sentiments varying about how they feel about this situation, but confidence and sentiment is extremely important, right? Could you talk to us about how crucial these interventions are when it comes to the capital market? Do you expect more to come?
Yes, I would say definitely there will be more to come. Yeah, so after the initial tumbling of the market, I think there is some, let's say, volatilities around people's sentiments. Yeah, but there'll be more to come because, stock prices and even housing prices, they have become, they have commanded higher priorities in terms of, on the government's agenda. Yeah, and the theory goes, if the stock prices are higher, then it will give people more wealth to encourage them to spend. Yeah, and it is also a very big psychological lift as well.
Well, thanks so much, Tianchen. We'll have to leave it there, but thanks for those insights. I was speaking to senior economists at the Economist Intelligence Unit, Xu Tianchen. And Jill, much more to come as we look ahead as to how this trade row between these two superpowers plays out. Back to you.
You'll be following that for us from Beijing. Olivia Xiong, thank you. Now, neighbouring Japan and South Korea also reeling from the Trump tariffs, both countries seeking to sit Mr. Trump down and secure a better tariff deal. Heading talks in Japan will be none other than Economy Minister Yosei Akazawa. Prime Minister Shigeru Ishiba appointed Mr. Akazawa based on his skills and experience after urging Mr. Trump to reconsider the latest levies in a phone call yesterday. A 25% levy on auto imports has taken effect, and a reciprocal 24% tariffs on other Japanese goods are set to kick in tomorrow. South Korea's trade minister is heading to Washington to meet with his American counterpart to seek ways to lower the 25% tariff rate imposed on goods from his country. Minister Chung In-kyo hinted that while it may be difficult to reduce exports, Seoul could increase imports, particularly in LNG. While Hong Kong says it won't impose countermeasures, Chief Executive John Lee vows to strengthen regional trade partnership amid rising tariff threats.
我哋要加強國際交往合作，積極深化區域合作。區域內嘅經濟體之間所協定嘅關稅同埋相互嘅優待，係區域內嘅事，唔受美國關稅影響。區域內嘅貿易可以做大、做深、做廣，抵消美國嘅貿易減少。
Coming up on East Asia tonight, uncertainty reigns supreme in markets despite the slight rebound today following one of the worst plunges in history. An expert tells us when investors should tiptoe back into the market.
Welcome back. Time for some business news. Regional markets recovering some lost ground as scope for tariff negotiations propped up investor sentiment, despite President Trump's threats of even higher levies against China. Japan's Nikkei 225 shot up more than 6% after falling nearly 8% yesterday. South Korean benchmark managing to end the day 0.3% higher. In Taiwan, the chip export-dependent Taiwan-weighted index lost 4%, pulled lower by losses in TSMC and Foxconn. Chinese benchmarks rose modestly after the country's sovereign wealth funds stepped in to buy shares and to shore up investor sentiment. Central Huiqin, that's a unit of state-owned sovereign wealth fund, China Investment said that it was buying more index ETFs as a show of confidence. Other funds made similar moves. Sinopec, one of the biggest state-owned oil companies, said it would buy back the equivalent of up to $409 million of its own shares. Other state-owned companies also announced share buybacks. Meanwhile, the Chinese yuan fell to its weakest level since 2023 at 7.33. That's after the central bank slightly loosened its grip on the currency. Analysts saying this is an attempt to counteract the blow of exports from the intensifying global trade war. Remember, during President Trump's first term in office, China allowed the currency to weaken by more than 10% against the dollar in response to U.S. tariffs. And how should retail investors navigate this uncertainty? Well, joining us now is Qi Wang. He is Chief Investment Officer for Wealth Management at UOB Kay Hian. Qi Wang, good to have you on the show. I guess the first question really is, the markets right now trading on tariff fears and awaiting responses from the various governments. What type of news flow, what type of information are you looking out for in the days and weeks to come?
Yeah, I said the other day we're looking for mainly three key things. One is the European response to the tariffs. We got that yesterday. Europe said they're going to negotiate, but this is hardly an easy negotiation. Negotiation just means that there's no retaliation, but it may also break down. And I think the U.S. negotiation is probably one of the hardest one to settle. The number two thing is the U.S.-China tariff war, and we are seeing the round 3 of Trump imposing 50% on China, and we're waiting to see whether China will impose another percentage of tariff on the U.S. That's very key. And third, don't forget, there's a domestic political situation in U.S. right now. There's public outcry against President Trump's tariff. There's political opposition against the tariff. And there's also the market turmoil, which put tremendous pressure on Trump. So I think our best hope is that at some point, we don't know when, that Trump may crack and change his policy.
We're also seeing aggressive pricing for Fed cuts, 4 in total this year. And this is despite the strong non-farm payroll numbers as well as the resilient labor markets. What's this mixed signals that's being sent to the markets? How should investors interpret this?
That's a great question. I think Fed is also a missing piece of the puzzle here. We talk about Europe, we talk about China, we talk about the domestic politics in the U.S. Fed is definitely a key player here at the poker table. Fed has not always been consistent. Unfortunately, they said before that any tariff-related inflation will be transitory, but the other day, Powell said that the inflation were here to stay. But I still think the Fed will cut rates, like you said. That will probably be the only good news out of this situation. But Fed may not want to be seen as bailing out Trump. So they're taking a wait-and-see approach, which puts further uncertainty on the market right now.
Okay. Looking at the big picture, what's your advice to retail investors feeling anxious about the geopolitical as well as the economic uncertainties?
Also a great question. Compliance reason, I can't really give advice per se, but happy to share what I'm doing right now, what I'm thinking. I don't think it's a time to be fancy and try to be a hero. I think the best thing to do is for investors to sit tight, stay informed by watching programs like this, knowing what's going on, and carefully assess the situation. By the way, the situation is changing every day. So that's also the challenge. And we need to wait for the dust to settle. And even if the dust settles, there will be time for the companies to adjust to this. So I think we're still talking a very early stage of the situation. There could be very long-term and profound impact on the global economies. My only positive comment right now, I do think some of the global leaders are very resilient. Both the U.S. and Chinese companies, they will figure out a way to deal with this at some point. But first, we need to know what is the outcome.
Okay, so equities market a bit jittery. What about fixed income options? I mean, if you were a conservative investor right now, I mean, we've seen 10-year Treasury yields falling 80 basis points from the January highs, 2-year yields swinging wildly. How should investors be invested?
In light of what I said earlier about the Fed rate decision, possibly more cuts later this year because of economic risk in the U.S., given the market turmoil and the uncertainty and the volatility, I think fixed income look attractive. More attractive equities because equity is so volatile and uncertain. However, we need to be very careful about the type of fixed income investing. We like very high-grade, top-rated investment-grade corporate bonds with strong cash flows and strong balance sheet. Try to avoid those investment grade but the low rating. They were subject to downgrade risk if the economy tanks, and forget about high yield. That's just too much risk because economic recession will bring more defaults among that space, and I'm a bit worried about that.
Okay. What about China? Emerging market funds, are they too risky now or ripe for a rebound?
In the short term, yeah, we see a lot of risk. Like I said, a lot of uncertainty. Long term, we are still very convicted on China. If I want to bet between the U.S. and China right now, I will still put China ahead of the U.S. because I highlighted, China probably have more policy tools to defend itself in the current environment, and Trump couldn't even get the Fed to cut rates. So that's a contrast. China has more than a national team and the other stimuluses, consumption stimuluses to stimulate the domestic demand and try to defend yourself in the current fiasco.
So if I was an investor with a moderate risk appetite, what should my portfolio playbook be looking like the next 6 to 12 months, say?
Well, I think you need to maintain some cash to have flexibility. The market will be volatile, including gold will be volatile, even though gold is supposed to be hedging the risk here. So gold will be should be part of your portfolio. Cash should be part of your portfolio. We talk about high-grade, high-quality fixed income, and also some Chinese equities, U.S. equities. By the way, I don't think this is going to change the AI trend globally. In fact, I see companies probably using more AI because of this to solve these supply chain problems and tariff-related problems. So I would stay invested in AI stocks.
Qi Wang, thank you very much for those insights. And that was Qi Wang, Chief Investment Officer for Wealth Management at UOB Kay Hian. And coming up on East Asia Tonight, U.S. Defense Chief Pete Hegseth eyeing more partnerships with Central American countries as he arrives in Panama for talks. And NATO Chief Mark Rutte has called China's expansion of its armed forces and defense capabilities staggering. He's on his first visit to Japan since taking over the helm of the security bloc.
This is East Asia Tonight, and here are the headlines we're following. South Korea declares June the 3rd as the date for its presidential election, one triggered by the ousting of its former leader, Yoon Suk-yeol. China vows to fight to the end after U.S. President Donald Trump threatened an additional 50% tariff on Beijing for imposing retaliatory levies against Washington. And stock markets stage a comeback from yesterday's historic sell-off, but investor sentiment shaky as Beijing and Washington exchange warnings of retaliation. Now, a special meeting will be convened among ASEAN economic ministers later this week to discuss ways the regional bloc can work together to strengthen intra-ASEAN trade. Singapore Prime Minister Lawrence Wong says this will send a strong signal of ASEAN's commitment to regional economic integration. And that's as countries around the world reel from the impact of tariffs recently announced by the United States. The 10 ASEAN countries have been slapped with import tariffs of up to 49%, with Singapore facing the baseline 10% tariff. Mr. Wong was speaking in Parliament in response to questions from several MPs on the impact of the tariffs on Singapore.
In this new environment, Singapore must redouble our efforts to remain a key node in global flows and a trusted business hub. We will forge closer links with like-minded partners who share our commitment to open and free trade. The US may have decided to turn protectionist, but the rest of the world does not have to follow the same path. We will identify other partners to join us and work around this to ensure resilience and maintain critical parts of the multilateral system while laying the foundations for a possible new and different global system that can be achievable later.
On the domestic front, Mr. Wong says Singapore may or may not go into recession this year and that the projected GDP growth of between 1 and 3% is likely to be revised downwards. He says measures announced in this year's budget, from vouchers that can be used to offset household expenditure to financial help for those involuntarily unemployed, will provide support for any short-term strain. Mr. Wong says the government is prepared to do more and that it has the resources to do so because of the financial discipline and prudence over the years. Still, given that the situation can change quickly, a new task force will be set up to help businesses and workers address immediate uncertainties and become more resilient.
The government will do everything we can to steer Singapore through the choppy waters and make sure no one is left behind. We will keep our economy open, our society cohesive, and our institutions strong. We will create new value propositions for businesses and investors. We will act boldly and decisively when needed to ensure Singapore continues to succeed. Above all, we will put the interest of Singapore and Singaporeans at the center of everything we do.
The announcement of a date for snap presidential elections in South Korea comes after the Constitutional Court removed former President Yoon Suk-yeol from office last week over his short-lived martial law decree.
60일이라는 짧은 기간 내에 차기 대통령을 선출하는 선거입니다. 선거에 대한 국민의 관심이 유례없이 높은 만큼 더욱 공정하고 투명한 선거가 되도록 지원하겠습니다.
The election date is scheduled for just before the expiration of a 60-day prescribed period to fill the presidential vacancy. Until then, acting President Han Duck-soo, who took over after Mr. Yoon was impeached, will stay on as the interim leader. Candidates are required to register by the 11th of May, with the campaign period set to begin the next day. Lee Jae-myung, the country's main opposition leader, is regarded by many as a top contender. He lost to Mr. Yoon in the 2022 presidential election by the slimmest of margins in history. NATO chief Mark Rutte has described China's expansion of its armed forces as staggering. Mr. Rutte is on a visit to Japan, his first to Asia since taking office last year.
China is building up its armed forces, including its navy, at a rapid pace. So we cannot be naive, and we really have to work together, assess what is happening, and therefore I think developing the defense industrial base is so important. That is one of the focal points in my visit here.
Mr. Rutte made the remarks at the Yokosuka base of Japan's Maritime Self-Defense Force. Mr. Rutte will meet Prime Minister Shigeru Ishiba tomorrow. The NATO chief has said the 32-member alliance is looking for more practical cooperation with Tokyo and other Indo-Pacific countries. His visit to Japan comes as the U.S. steps up pressure on defense allies to increase their military spending. A U.S. Defense Secretary Pete Hegseth has arrived in Panama for his first official visit amid repeated threats by President Trump to take back the Panama Canal. Mr. Hegseth will meet with Panamanian President Jose Raul Mulino before paying a visit to the critical waterway. Now, this marks the second visit by a member of the Trump administration to the Central American nation, following Secretary of State Marco Rubio's trip in February. And Mr. Trump has repeatedly threatened to take back the canal, claiming China's control of operations at the vital waterway is threatening U.S. national security. Panama and Beijing have both denied the allegation. Mr. Trump has refused to rule out military force to reclaim the shipping lane and has increased American troop presence in the region. Meanwhile, a BlackRock-led consortium deal to buy 2 Panama ports from Hong Kong's largest conglomerate, CK Hutchison, has been thrown into doubt after Panama's top auditor found irregularities in its payments. Bloomberg says the auditor alleges that Panama ports used tax-exempt subcontractors to lower its dues to the government. The audit revealed the use of tax breaks to save $850 million of at least $1.3 billion it owed in payments in the first 25 years of the contract period. CK Hutchison is also accused of breaching its agreement to share 10% of net income with Panama's government. The auditor had planned to file a criminal complaint against maritime authorities who granted the contract renewal in 2021. And as U.S.-China geopolitical tensions continue, the fight over the strategic trade route impacts not just big businesses, but also ordinary people. CNA's Olivia Xiong with this report.
49-year-old Chinese national Zhou Mei regularly posts snippets of her work and life in Panama on social media.
我们的这个办公室呢，是可以看到这个太平洋的这个海景，那么同时呢，也可以看到巴拿马运河上等候过运河的这些船只。
She expanded her shipping business in Shanghai to the country in 2004 after marrying a Panamanian. That's way before Chinese presence there surged after Panama switched diplomatic ties from Taiwan to Beijing in 2017.
我就很想通过这个什么样的渠道，不光是让为我的家人，通常呢也想让我的这个很多的航运客户了解巴拿马，包括有很多的这个我的好朋友对这个巴拿马的旅游资源他们也不了解，所以对我而言呢，就是非常好的一个契机。
The mother of two notes her videos have garnered more attention of late after US President Donald Trump ramped up calls to take the Panama Canal back from what he termed China control since taking office, putting the tiny country of 4.5 million people on the map.
特朗普在全世界给巴拿马打了一通免费的广告，这个效应还是很高的。
For Panamanian undergraduate Moses Castillo, who studies in Beijing, the newfound fame of his country is not something to be celebrated. Moses is among many young Panamanians granted a Chinese government scholarship to study in China. The 23-year-old was concerned when he first heard the news that Panama was pulling out of the Belt and Road Initiative, or BRI.
I was kind of sad, frustrated, a little bit worried, like if the relationships between China and Panama is like difficult, and how is that gonna affect my future, and also me being here, like how that's gonna affect, and me having a scholarship here also.
The second-year undergrad says he chose to study in China partly due to its affordability, but also the potential opportunities. He says he has already received some job offers from Chinese companies operating in Panama.
I'm studying civil engineering, and I chose that because Panama is a developing country, so we need a lot of infrastructures like bridges, railways, and things like that. So I was thinking like, yeah, it's a good opportunity. And at that time, China was also investing a lot in Latin America with infrastructure projects. So I was thinking maybe I could also work in some of these in the future, maybe.
Panama lies more than 14,000 kilometers away from where we are in Beijing, across the Pacific Ocean. Now, while China is Panama's top trading partner, the country also plays a significant role geographically when it comes to connectivity and trade, and as a gateway to South America, a region that China has been trying to deepen its connections with as it seeks out resources like lithium and agricultural products like soybean and corn. About a fifth of the cargo passing through the Panama Canal belongs to China, making it the second largest user after the US. Against this backdrop, China reacted strongly to Hong Kong-listed C.K. Hutchinson's sale of its Panama port operations to a consortium led by American investment firm BlackRock. Analysts said the diplomatic victory over the Panama Canal will likely motivate the Trump administration to repeat the stunt. One analyst predicts that the number of signatories to the BRI could shrink by 20 to 30 countries in a year.
What's important are the politics and the optics, and one cannot overstate how important this is. That forcing a country to withdraw from the Belt and Road and seeing the reaction that Trump and Marco Rubio got in the United States among their base is going to motivate them to do this now in dozens of other countries. That doesn't mean the BRI is finished. That doesn't mean it takes away from the longer-term strategy of what the BRI set out to do and what the Chinese are set to do. It just means they have to recalibrate in a much more contentious environment. The first and foremost priority for Xi Jinping today is protecting the domestic economy. He's got to keep that domestic economy moving forward. And so I think the U.S.-China relationship is more important than the China-Panama relationship. So they're kind of going to let Panama go.
Brazil has become China's largest trading partner in Latin America, even though it's not a signatory of the BRI. So experts expect trade to remain robust with the region. This also as this year marks the 10th anniversary of a cooperation forum between China and Latin America, as well as Caribbean states. Olivia Xiong, CNA, Beijing.
Coming up on East Asia tonight, another company under pressure from Beijing over its business dealings. Is Qi in? We'll tell you what the officials want from the fast fashion retailer. Welcome back. We have more business news next with Roland Lim. And Roland, an unexpected development in Nippon Steel's bid for U.S. Steel.
Right you are, Jill. Now, President Trump has launched a review of the company's proposed takeover that was blocked by his predecessor, Joe Biden. Mr. Trump said he has directed a government panel to look into the acquisition, reviving hopes that the controversial takeover might still be back on the table. Now, that comes months after his predecessor, Joe Biden, blocked the deal, citing national security concerns. Mr. Trump has now given the Committee on Foreign Investment in the United States 45 days to reassess the transaction and evaluate if the measures proposed by the two companies are robust enough to mitigate any potential security risks. The review is being welcomed by both sides. Nippon Steel says it's confident of a favorable outcome, while U.S. Steel is hopeful the renewed scrutiny will pave the way to close the deal. Nippon Steel shares in Tokyo up by more than 6%. U.S. Steel shares surged more than 16% overnight. Trump himself opposed the deal initially, but has since softened his stance after his meeting with Japanese Prime Minister Shigeru Ishiba back in February. The world's largest memory chip and smartphone maker, Samsung Electronics, among the firms bracing for challenges from President Trump's sweeping tariffs. It is projecting a 0.2% drop in first quarter operating profit, and that's much smaller compared to analyst estimates of a 21% drop. For the January to March period, Samsung is projecting nearly $4.5 billion in operating profit. It sees its revenue reaching more than $50 billion. Analysts expect the company's smartphone shipments and demand for memory and AI chips have risen in the first quarter, with customers stocking up on electronic goods in anticipation of U.S. tariffs. Chip makers have so far been exempted from reciprocal tariffs, but President Trump has reiterated plans to levy trade curbs on chips very soon. Samsung is expected to release a detailed breakdown of earnings for each of its businesses later this month. The stock climbed more than 3% before giving up most of the gains for the day. BYD shares on the rise after the EV maker flagged a record first quarter with sales of vehicles topping 1 million units. Now they hit an intraday high of 339.80 Hong Kong dollars. Net income for the first 3 months of this year expected to jump between $1.2 to $1.4 billion. The better than estimated earnings were helped with overseas sales, achieving what the company has termed leapfrog growth. It sold more than 416,000 pure battery vehicles, more than the roughly 336,700 made by U.S. rival Tesla. While BYD faces punitive tariffs in the U.S., it has made a big push into Europe, South America, and Southeast Asia. Exports account for about a fifth of total deliveries in the January to March period. Beijing reportedly persuading fast fashion giant Shein to keep manufacturing in China. That's in the wake of worldwide tariffs imposed by Washington, which could hit Chinese exports hard. China's Ministry of Commerce is said to have reached out to Shein and other companies, advising them against diversifying supply chains by sourcing them from other countries. The retail firm has responded by ceasing tours for Chinese suppliers who have factories in Vietnam and other Southeast Asian nations. Now, Donald Trump's first term, many Chinese firms sidestepped tariffs on China by shifting production overseas. U.S. President Trump's tariffs have been a wrecking ball to global stock markets. As numbers plunge, fears of recession have started to rise. But is that really where we're headed? Well, it's crucial to first note the difference between what happens in the stock market and the economy. A market wipeout means that investors expect companies listed on the global stock exchanges to see a fall in profits and a rise in costs. Now, this would increase the chances of a recession. However, a downturn is still not inevitable. Another definition of a recession is having 2 straight quarters of decline in real GDP. Now, forecasters have begun sounding the alarm bells. JP Morgan has raised the chance of a recession to 60% from 40%. Goldman Sachs has also increased their odds to 45%. HSBC puts it at 40%. Other barometers of global economic health are copper and oil prices, both of which have fallen more than 15% since Trump dropped his tariff bombshell. While the turmoil has affected confidence on Wall Street and spooked investors, it's important to note that there haven't been that many truly global recessions. Now, there have been 3 rare examples, of which when we saw synchronized downturns in major economies. There was the Great Depression in the 30s, the aftermath of the Great Financial Crisis of 2007, and the panic around the pandemic. As for whether or not history will repeat itself this year, well, remains to be seen. And that'll do it for business. Jill.
I appreciate that. Thank you so much, Roland. Now, South Korea and Japan have pledged additional supplies to support relief efforts in earthquake-hit Myanmar. This comes as the death toll surpasses 3,600, with more than 5,000 others injured. Seoul is set to deliver another $2 million in supplies, including tents, blankets, and water bottles. This after it provided $2 million in humanitarian aid through the Red Cross last week. Meanwhile, Japan's military will send medicines and medical equipment to Mandalay tomorrow, building on earlier efforts by a 32-men-strong medical team arriving in Yangon to deliver emergency supplies. Tokyo has also extended $6 million in aid to Myanmar. Myanmar's second-largest city, Mandalay, also the hardest-hit region, is showing signs of recovery as businesses gradually reopen. An 80-member-strong rescue team from the Singapore Civil Defense Force has also come home after an 11-day deployment to Myanmar. The Operation Lionheart contingent was deployed a day after the quake hit to join search and rescue operations there. Well, let's get more from Aslam Shah, who's joining us from Singapore Changi Airport's Terminal 3. Aslam, the team must have received quite a welcome home.
Well, Jill, it was a lively homecoming, or great reception with banners, clappers, applause, plenty of emotions, many smiles, some laughter, some tears, but overall a huge sense of relief from family members who welcome their sons, fathers and husbands. When they left late March, many of them were still unsure about the situation in Myanmar, and they left in quite short notice. Some only had a few hours notice that, that their family members are going to be away in one of the worst earthquakes that hit Myanmar. Now, what was surprising today as well was that there was a huge contingent of Myanmar residents who were here at Changi Airport. Now, about 400 were here, and about a quarter were of Myanmar residents who came today. Although they were not related to the SCADF team, they wanted to show their thanks to the officers, the personnel who went over. And I spoke to them. They told me about how it was a time that they really felt lonely and really felt hopeless when they saw the scenes back home about the disaster. But the fact that Singapore sent aid quickly and the officers were ready to help, it really touched them. Let's have a listen.
Singapore is our second home, so we are thankful to the Singapore government and also the Lionheart. We are very respect to all the Lionheart and the Singapore.
Because now we are suffering, the whole country is suffering because of coup, a lot of separatity, and then second, attack for us. So I'm very thankful for all your team because you all support for us. Thank you very much.
So the 80 member team that went over, most of them, over half of them are of the Muslim faith, and they had to miss the Hari Raya celebrations. So many of the wives and the young children that I saw today, they were celebrating without their family member for the first time during this Hari Raya period. It was just a day or so before Hari Raya. I spoke to some of them, and the SCDF team members showed their appreciation to their family members, that without them they couldn't actually go and respond to the call of duty. But of course, it was a very tough period for the family members as well.
It's the first time celebrating Eid without the men in the house, but alhamdulillah, we managed to get through it and still celebrate it just because we have a little one. We are very blessed to have him back earlier than expected.
And Aslam, it's all about making a difference. Tell us more about the impact of the rescue operation.
Well, the operation is multifold. It includes rescuing survivors, recovering dead bodies, and also providing aid to Myanmar. Singapore is part of a larger contingent. There are many rescue teams who are there, which are coordinated by a central body as well. So the impact that Singapore had it includes recovering dead bodies. They also managed to rescue survivors. They also helped with providing aid and some equipment from the SCDF. So even though the 11-day rescue operation is over, it is hoped that their impact will continue. And I think overall, based on the sentiments on the ground as well, and the sentiments from the Myanmar residents here as well, the show of support that Singapore stands ready to support is also a huge morale booster for the people of Myanmar as well. Now, earlier today, the team leader who went over also talked to the media, along with Law and Home Affairs Minister K. Shanmugam, who actually shared his appreciation for the team. This team, 80-member team, it includes 13 national servicemen. Now, these people are serving their full-time national service or serving their reservist. And the minister showed his appreciation to them earlier today.
It's a sacrifice. Thank you for doing it. We think of the thousands of people in Myanmar who are affected, but you went. Serious risks because of the aftershocks, the nature of the place, the kind of terrain, and of course the buildings. You worked in that kind of risky situation.
Our medical setup is not set up to treat masses of casualties. So we do what we can to make ourselves useful even towards the end of our ops. But we have a MOH team that went forward, our MOH EMT team that went forward to render medical aid. So even as we step down our Ops Line Hub contingent, there are other international teams stepping forward to provide aid. So if we look at that from that perspective, when there are better teams that can take over the current needs of the community, then we should step down.
All right, we leave it there for now, but thank you, Aslam, for covering that story for us. CNA's Aslam Shah. Well, that is East Asia Tonight. Don't forget headlines anytime at cna.asia. Plus, we're on Facebook and also YouTube. Good night.